Well, the Dow dropped another 300 points at its opening today.
The signal that the third straight day of losses for the stock market. The steep fall began on Wednesday, and after the Federal Reserve raised its interest rates to the highest level in 15 years, on Thursday, the Dow plummeted more than 700 points. It is the worst day in 3 months. That followed the latest data showing a drop in retail sales. Well, Jesse Wheeler joins us now. Jesse's an economic analyst for the decision intelligence company Morning Consult. Thanks for joining us. That was quite the news we got this week. How does the Fed's decision to once again hike rates impact the possibility of a recession?
Great, and thanks for having me on. Yeah, it was a really kind of a roller coaster week for financial markets this week after we saw the exuberance in the markets after a softer than expected inflation report earlier in the week. But then the hopes of kind of less aggressive monetary policy kind of dashed by Chairman Powell's remarks in midweek, while they raised interest rates to the highest rates for some time, as you said there. The big news was that they increased their projections for the level of rates into 2023, with Powell saying that these stubbornly high inflation is going to mean that rates need to go higher and stay higher for longer.
So what does this latest data on the drop in consumer spending at the start of the holiday season indicate?
So consumer spending has been very, very strong. So over the last few months, despite inflation, consumers have continued to spend. However, we're finally seeing some weakness there. I think the big takeaway here is that as inflation has been persistent, especially for essential goods like groceries and gasoline, et cetera, that it forces trade-offs for consumers, and this continues to eat into budgets and place financial pressures on households. So they're going to either need to make trade-offs and spend less money, or they're increasingly also starting to eat into savings and potentially increase credit usage as well.
Couldn't have come at a worse time of year as everyone's out there Christmas shopping. So Jesse, what will the key drivers of market performance be in the first months of the new year?
Well, I think a number of things. All eyes will still, of course, be on the Federal Reserve and the pace and rate of those interest rate hikes as the Federal Reserve intentionally moves to dampen demand and cool the pace of economic growth. Within that space, I think that wage growth will be critical to watch as wages provide incomes to hold up consumer spending, but also is a critical concern for the Federal Reserve, which wants to see wage growth cool to combat inflation. So we're at this very interesting moment in the economy. There's not that much, the baseline is for very weak growth next year. So there's not much room to the downside for the U.S. to slip into recession. And, with global risks from China to Russia and Europe abound, I'd say that, it's certainly, potentially a very risky year moving into the 2023.
Sobering news. All right, Jesse Wheeler. Jesse, thank you so much.
Thank you.